Hey guys, welcome back for another episode of the Crypto Forecast. Today I'm going to be running through all the time frames like I did last week. Nothing really changed in bigger time frames because the price is actually at the same level that it was last week for my last video, but I'm going to repeat very quick for those who maybe missed my last video or for the new people coming here. So on the monthly time frame, we can see that we are so far bouncing on the 20 period moving average, which is the red moving average here. We are clearly having a bounce. Last week we were still in this previous candle because it was still the end of last month and we were having a bounce. And in this current candle we are doing the same. We went back down almost to test the 20 period moving average again, and we're having a bounce here. So far we're bouncing here. It doesn't mean we're gonna just bounce and pump here, but I anticipate the price will be holding above the 20 period moving average. I don't think it's going to break down that easily because it's very strong support. So maybe just holding here for the next couple of candles. I don't know exactly. We'll have to take it candle by candle, but for now we're holding above the 20 period moving average in the monthly time frame. Moving on to the weekly, same like I said last week, we are, or it seems we are also bouncing on the 150 period moving average, which we're having a golden cross here. Didn't cross yet, but they will cross next week. So for now it seems we're holding here on the golden cross, so it's expected to hold here. Like I said, for the monthly, it doesn't mean it's gonna just bounce here and pump very hard and very quick. It might happen, but it might not. But I would expect at least the 150 period moving average to hold as support here. On the daily time frame, we are below all the moving averages, and all the moving averages are in sequence. If you see, the top one is the 200, and then we have the 100, then the 50, and then the 20. So they are all in sequence, and the price is below all of them. This is what defines a bear market. So if we only look at the moving averages, the picture is bearish. However, if we do a little bit more technical analysis, we can see that the price is holding exactly at the 61.8 Fibonacci retracement, which is this red line here. 61.8 is the most significant of all the Fibonacci levels. And this is if you draw the Fibonacci retracement from the bottom of the market and up to this top here at 13 or 14,000. We are holding at the 61.8, which, like I said, is the most significant Fibonacci to get a bounce, or at least to hold, to hold above it for some time before the siding. The line is just too significant to just break down like nothing. We are also holding on this very significant support here, which comes all the way from the bear market here in 2018. The price was holding here. It capitulated on the hash war, when the day of the hash war. Obviously we had capitulation here. I talked about that many times in the past. I'm not going to repeat here the reasons, but it broke on the hash war, and then it quickly went above this line was where the price was holding. We had a little bit of FOMO here, so it got overextended, and now we did the full retracement back to this level where we were holding so strong in 2018. So this line is also very significant to just be broken in the downside like nothing. So the daily time frame is a little bit neutral. Moving averages and price action pointing bearish, but support and resistance and Fibonacci pointing bullish, pointing we're good for a bounce here. We're very oversold as well because we've been going down for about 5 months now. So downtrends or downswings don't last forever, just like upswings don't last forever. So this is very, very extended. It's been a very long time going in one direction. So I would expect this to turn anytime. But of course, we need to start getting above the moving averages. We need to start closing above at least the first moving average, which is the 20-day moving average. We need to start closing above it and start to see some momentum in the upside. If we go to smaller time frames, all we have here is the head and shoulder. which everybody was talking about last week. We had a break with enough volume to call it a breakout. We came back down to test the neckline. We actually went below the neckline, but it wasn't really a breakdown. So this target at 8,200 is still valid. I do think we're gonna go to 8,200 based on this head and shoulder pattern. And for those who are doing the short-term trading, I am not personally, I'm just buying dips and holding. But if I was doing the short-term trading, like the day trading, I for sure be taking profit at 8,200 if I entered the breakout of this head and shoulder and I was still on the trade. I would, if the price makes it to 8,200, I would be taking profit, because not only is a target from a geometrical pattern here, it is also, we're gonna have very close from this level, we're gonna have the 200 period moving average in this time frame. We're gonna be very close from the 50% Fibonacci retracement here. And if this takes some time to make it to 8,200, we will be also close enough from the resistance line of the top of this downwards channel. So I would be for sure taking profit at 8,200 if I was doing the short-term trading. I am not personally, but if I was doing the day trade, I would take profit here. And then if it continues to go up, oh well, let it go up, because we're gonna have a strong resistance very close above this target here. So, and then I would, if it retraces, I would enter again on the dip, and that's how you do the day trading. And if it doesn't retrace, it continues to go up, then I would buy the breakout of this downwards channel. If it was going to break out and finally change the trend, reverse the trend, then I would enter at the break of this downwards channel here. So overall, the picture is very neutral. The sentiment is very neutral as well. Now the sentiment is starting to get a little bit more negative than positive. So, but maybe we need to get more negative before we actually reverse. I don't know, guys. The sentiment is still pretty neutral. Like I said, it's turning a little bit more negative now, but maybe not enough to have a reversal yet. So the short message: keep patient, practice patience. I mean, this is very difficult for day trading. The only pattern that I saw in a long time to enter a short-term trade was this head and shoulder, and another little head and shoulder we had here on the 5 or 15-minute candles. There was a clear head and shoulder here which made the target, but those have been the only really the only patterns I saw for short-term trading in a long time. So overall, difficult for day trading. For me, the best strategy at this part of the market cycle is just buy the dips and hold. If you believe we are in a bear market, then sell the rallies. When it pumps, sell the rallies, and then wait until it goes all the way down. And then when it goes up again, sell the rally. Concentrate in selling the rallies if you believe we are in a bear market. For me, we are very clearly in a bull market. So for me, the best strategy is buy the dips and hold. And I say for me, it's very clear in a bull market because we are so high from the low here 1 year ago. It's been 1 year already, guys. And we are so high, so we are far from making a new low here, a new lower low. So higher highs are, higher highs means uptrend and means it's a bull market. If you look at the bigger picture and bigger time frames, we're very clearly in a macro bull here. If we start, if we look from 2011, this is clearly a mega bull market. But within these 4-year cycles, we are also like, it's taking forever to retrace a little bit here from this mega pump that we had here very quick. Now it's taking forever to retrace only a little bit, compared to the previous low. So for me, we are very clearly in a bull market for the whole 2019. But like I said, it's been 5 months going down slowly. So many people believe we are in a bear market. If you do believe we are in a bear market, then sell the rallies. For me, I'm only buying dips and holding. That's all from me today. Thank you guys very much for watching, and I'll see you in the next one. Bye.